Just 1 second. All right. Welcome everybody to another episode of Cody Underground. Hey, that is some good comedy there. I meant to do that. All right, well, forget. Let's do it on, we're just going to do YouTube. Forget the I Am Cody Willard app today. I'm sorry you're having some technical difficulties with it. Piper, just turn yours off. Let's talk about the ping-pong stock market. I don't know why you put this in front of me, Piper.
I saw it coming.
No, don't hit for a second. Let me just hit at the phone, at the camera for a second. So, look, since late January, when the markets touched their all-time highs, it's probably not good for the sound. I'll do one more and then I'll talk. Sorry about the ricochet there. Ping-pong stock market. I mean, it has been so volatile. It's been up and down. Markets going up 2 days in a row, then down 500 points the next day, down 300 the day after. And the thing about volatility is, Trading with Cody subscribers have seen me talk about a million times. Volatility begets more volatility. And oftentimes can signal a top, not necessarily the top, and it doesn't necessarily mean that the markets are about to crash. But you've seen, if you go look at a 1 or 2 year chart on the Dow or the triple Qs or the SPY, S&P 500, whatever, you'll see that there for 2 years almost, we barely had any 1% daily moves. For months at a time, markets just steadily climbed. As I called it for years, the steady Betty stock market. And as I just mentioned, and now the camera's not level, but as I just mentioned, leave it, it's fun. You've got a ping pong market now. And it's not necessarily that the 10-year treasuries, for example, by the way, hit 3% yield this week. It's that the move from the day that Trump was elected to the 3% has been pretty swift. And when you have the moves that get volatile like that, it creates other volatility. And what really becomes the concern is we're all talking about how the economy's fine, the banks are fine, earnings growth is great, but when you get spikes and when you get moves in the treasuries and in the dollar has been on a tear, and when you get moves like this that get sustained, someone out there is swimming naked, to steal a phrase from Warren Buffett, the great welfare master who begs for bailouts we talked about recently. But point being, there will be exposure out there that these banks will have, that will be to the tunes of billions of dollars, and then other banks will have exposure to those banks. And then, you remember MF Global, John Corzine, Republican Democrat regimer, governor of New Jersey, came back and he used to be the chairman of Goldman Sachs, came back and ran MF Global after he lost an election in New Jersey, and ran MF Global, and apparently they were making bets on leverage with the depositors' money that they weren't supposed to be making, and they thought that there'd be a return to the mean. Things would get back to average, whatever he was betting on. I don't remember what the details were, some currency or some derivative or some securitized real estate something. Doesn't matter. The fact is that when he finally was exposed, there was other banks exposed to that, and you can get these ripple effects. And that's what you've got to be concerned about. And again, I'm not saying this is the top, go run for the hills. I still own a bunch of stocks that I've owned for years. I've trimmed them down. I bought some puts back in late January and nibbled a couple more when the market spiked after this initial volatility hit. But it's just something that we should be aware of. And I keep saying that the stock market and not just the stock market cycle here, but the economic cycle, the bubble, what I've called for 8 years now, the bubble blowing bull market is long in the teeth. Piper, can you just tilt it a little? That side, there you go. Now the other way. Your left hand's got to go up. No, you're not even doing that one anymore, is it? Is it recording? No, just put it, just leave it there. It's fine. I like it aiming for it. Just telling you, push that side up a little bit. Whatever. We have a busted tripod, I guess. It's not even close. You might as well not even have touched it, Piper. You're gonna be fired. Finally. Pay the big bucks to do all my. You know, I used to have a TV show on Fox. I had like 12 people supporting me just on the cameras and mics, and not to mention producers. I sure didn't have as much freedom like being able to play ping pong as I'm doing it. You know, I used to actually play basketball. I had a basketball there in the Waldorf Astoria Bull and Bear Bar with all of these, you know, antiques and glass and marble and bronze statues and very expensive liquors, and it was pretty fun. I'd spin the ball and do tricks while I was talking, doing a bit or something. And my co-anchors, Rebecca and Eric, one day, as I was doing one of my lone bits, I was talking about something, they start throwing the ball back and forth to each other, being funny. And it wasn't really very funny, because I'm actually trying to talk about like bailouts or something, and the ball's going back and forth in the air, and that's why I hadn't used the ball. And then they missed, and they dropped it, and it clatters behind and breaks all these glasses. My basketball was quickly banned by the producers.
Sounds like
And it wasn't even my fault, for crying out loud. I sound like my daughter now.
Sounds like you had a golden retriever moment there for a second.
Golden retriever.
Keep your eye on the ball.
Well, they need to, but it wasn't my problem. I was working. All right, I got some questions. Let's get some answers. You know, actually, one of the questions I just sent out, I'll just say it out loud because I did send it out, and that is that the guy asked, as I wrote yesterday talking about why I'm still cautious and still bullish overall, but cautious about it. He says that, Cody, while you say markets could put in some near-term bottoms, somewhere down the line here if earnings season keeps going the way it is, and that is, i.e., a sell-off reaction to the news of earnings. Despite how strong they've been, the markets have been reacting negatively, and I've been talking about that. I predicted and thought that would happen there for a month, because every time I listen to the financial commentators on TV, or even the USA Today wrote an article about how earnings would save the stock market, and that meant expectations were higher than anybody even really expected. And we'll see if that continues to play out, but that has been the case thus far in this earnings season. And at some point, I do think we'll be able to nibble some stocks here, maybe get some near-term bottoms. I've been, again, trimming stocks before this volatility and sell-off started, so I have the cash and wherewithal to do some nibbling here. I'm rambling on. I need to answer this guy's question. You also say the bubble blowing bull market, he didn't write the thing right, is awfully late cycle at best. And does this mean that once it ends, it's time to bear up for another 2008-like crash? Or that we will have to be selective with our stocks, not, quote, sell them all, because you anticipate that we may trade more sideways going forward? And I think that's probably the latter is a good, I wouldn't phrase it exactly like that. I don't know that we'll be sideways. We might drift lower. I don't expect a crash. Now, that being said, let's throw that caveat back out there. In this ping-pong market, with all of these rates, treasuries, stocks showing volatility, spikes, sell-offs, sustained sell-offs, if not crashes, depends on how you define these things. But you get exposure, and then you could get a 2008-like crash, but I sure don't think that's something we need to anticipate just yet. But I do think we'll have another crash in my lifetime. I always talk about that. We need to be prepared for it. Buy when there's blood in the streets, sell to the sound of trumpets, as supposedly the Rothschilds have once said. All right, some questions here. Cody, do you see Amazon making 10 times its current earnings from these levels? And when would they get there? What would it take? Thank you. Yes, I do see Amazon earnings going up tenfold from here, but that doesn't mean I see the stock going up tenfold from here. I think the stock still is upside. I own it. It's one of my largest positions. I've owned it for a long time and I continue to hold it. But earnings have been long suppressed at Amazon in a search, in a reach for market share, for dominance. And so Amazon Web Services is a hugely profitable segment of their business. Good revenue growth too, huge revenue growth. But most all segments of Amazon's businesses, Rothschilds, most all of Amazon businesses show strong growth, 40, 50, 100% growth. And the difference is that Amazon Web Services is incredibly high margin. So instead of in their retail business running single digit or even less than 1% operating margins some quarters, or even negative, I suppose, in years past, you've got earnings that are power in these other Amazon Web Services, for example, which is now a multi-billion-dollar business itself. So as that part of its business grows, earnings can certainly expand quickly relative to where they've been, as the retail side of the business has really been the biggest part of the company as far as revenue goes. And again, retail sales, obviously a low margin business. So, not only that, you get growth, and eventually Bezos can expand some of those retail margins. He's putting everyone in the world out of business, at least everyone in the United States in the retail world, not entirely out of business. Shop local, as I used to support your local business, as I used to finish every show I ever did on Fox Business. Spay and neuter your pets, dogs and cats. That's what Price is Right. Bob, what's his name?
Bob Barker.
Bob Barker.
The bark on that guy.
So, look, Amazon's got a lot of growth, and they can certainly expand margins and thereby expand earnings, and earnings could go up tenfold from where they are right now. Time frame, 5 years would be best case. I'd say 5 years. 3 years would be best case. 5 years, probably 7. Possibly if they're still expanding and investing and trying to grow their market share globally instead of just in the United States or something. I wanted to buy some shoes online the other day, and Amazon had these hybrid golf shoes on sale. Or I just Googled golf shoes on Amazon, and they had these hybrids. I thought, oh, those look sort of cool. And they were on sale too, so I bought them. And then I wanted a different color, maybe a different style or something, so then I was like, hey, I should look at another online retailer. So I Googled shoe sales or something like that, and Zappos.com came up. Do you know who owns Zappos, Piper?
No, I've heard of Zappos.
Amazon.
Makes sense.
So, you know, they did have a different selection. The shoes there were a little more expensive. I might go back there and buy them anyway, but I logged in using my Amazon login, and I don't know, hopefully hopefully I can actually use my Amazon credit card stuff, so I don't even have to fill it in, because that's why I don't go anywhere else. I I'm not going to type in my credit card every time I go somewhere. That's such a pain. I can't believe, thank you, Trading with Cody subscribers, for typing in your credit card information if you don't have a PayPal account. If you have a PayPal account, it's one click. But you just go to tradingwithcody.com and, you can't pay with your Amazon credit card. Suppose I should do in-app purchases and people could, but then I'd have to share 30% with Apple. And my own margins go down from basically 99% because there's very little reproduction cost to additional sales, additional subscribers coming on. Maybe 95%, I don't know. But if I'm sharing 30% of that with Apple or Android, Google, that'd be a big chunk of my income. Oh, thanks, Apple. I already pay taxes, unlike Google and Apple. Cody, I'm gonna get some water. Bear with me, people. Here, let's play while I'm drinking, Piper. For kill shot, finger shot. Point for Piper. Better not put that on the table. Hit it in there. I know you. Next question is also Amazon, but it mentions Google here. Did you see trading, maybe in Amazon and Google and 3 other stocks suspended due to a price scale code? What's up? No, didn't see it, and who cares? We're not trading these stocks, so it's irrelevant to me as an investor in the companies. I don't know. I missed it. I've been getting ready, primping myself clearly for today's Cody Underground episode on YouTube. Cody, for Q&A. Question above. Oh, it's the same question. How does this work? Is there ever trading? Guys, honestly, just don't worry about it. Who cares? If they're suspending trading for a minute, it's not like that's going to affect the valuation or something. Cody, is Finisar, misspelled there, Carl, is Finisar a buy? The idea is that it might be a play on Apple's 3D sensing for facial recognition and augmented reality. I've owned Finisar in years past, and it's a well-run laser fiber optic centric company. Components mostly. I think they did go upscale into some systems. But Finisar is I don't like, you guys are always asking me about these fiber optic laser companies, Sienna or Finisar. But, JDS Uniphase, come back to it, man. They never recovered. They were down 99% when they went private or got bought or merged or whatever it was. And there's still, the biggest problem with most of these companies, even in this case with an Apple supplier, is if you are dependent upon Apple for most of your sales, Apple plays hardball with you. You don't have anywhere to go. Your margins suffer when you're dominate, when you have customers that are pressuring your margins, and that's what there's still too much competition for me to, and this is ironic, politically speaking, I want all competition in the world. But as you've seen in the stock market over the last 30 years, when competition is eliminated in food, beverage, beer, distribution, chickens, computers, software, operating systems, when competition's eliminated, margins expand. DRAM, flash. You end up with 1, 2, 3 companies dominating the market, and then investors really profit, especially long term. Margins expand. There's little competition. Oligopolical economic status. Not something that's good for the world, or prosperity, or consumers, but it's good for the stock market. pretty much like everything else the Republican Democrat regime does. It's good for the stock market. If there's going to be an antitrust division, do your damn job. I'm saying this for 10 years, including back on Fox. Do your job or end the antitrust laws. Here's a thought. Facebook, Twitter, Google, getting cracked down. Snapchat, they're going to get cracked down on their data. And it's going to be much harder, much more expensive to meet the regulations if you want to be a major social media company. So guess what that does?
What's the cost of ads?
What it does is it raises the barriers to entry. If you want to be a social media company, you got to have millions of dollars to just deal with the regulations. So it's throwing Twitter and Facebook and Google to the briar patch. Bring on the regulator. Ooh, please don't regulate us. Who do you think is going to write the regulations if the Republican Democrat regime is going to enact the law? It's going to be Facebook's attorneys, Google's lobbyists. Yeah. Hold your Facebook and Google. I own Twitter. You know, and truly, guys, I talk about this, and I just do want to remind you that politically, morally, I fight this stuff, this corporatism, this far-reaching corporatism. Some might say fascism, where government and businesses are being married together. Fascism didn't originally mean this nationalistic fervor. Its original definition was the marriage of government and business. And at any rate, I fight that stuff politically and morally. But as an investor with our money, I mean, you got to own the stocks. The whole system's set up to benefit them. Maybe not plow into them right now, as I've been saying, but you know, you can't fight this stuff with your money. You've got to take care of your family with your money. So you make sure you do the best ethical, moral stuff you can do, legal stuff you can do with your money. Like, I don't invest in gun companies. You know, I'm not saying don't buy guns or what. I'm not even trying to go there. But just personally, I don't want to invest in companies that sell tools that are being used to bring death upon humankind. So then again, I own Google, and they partner with the NSA. And so you can't even avoid it. I mean, we're all hypocrite with our money. If you've got any, careful out there with your money. Be strong with your politics. I don't know. Any robotic suggestions right now? I know you wrote a book on the subject. Yeah, I wrote a book probably 5 years ago called The Robotics Revolution, or 12 Stocks for the Robotics Revolution. I think most of them have gone through the roof. I only owned maybe one. I don't know. I don't have any suggestions for the robotics industry right now. Just like everything else, like I've been talking about, valuations are stretched in robotics, valuations are stretched in social media, in social media. In just about every sector. Verizon doesn't have a stretched valuation, in my opinion. Maybe that's one. Cody, one more time. That is now an all-day suspension of Amazon and Google and bookings on the New York Stock Exchange. It's still trading on the NASDAQ, though. I'm curious, do they trade on the New York Stock Exchange as well? Doesn't matter. are you buying Google today? You probably still can. I guess, yeah, go to the NASDAQ and it'll be okay. It's funny how, especially if you're watching, maybe this is on all the financial news networks. Maybe Fox News is breathlessly reporting this. CNN is mentioning that these stocks have been suspended or something. But, we're not day trading. So I'm sorry to mock and tease. But he did put all caps. Cody, one more time. I love you, Dad Fitz. He's one of the guys that we talk to on here all the time. He's going to be angry at me. Sorry, Dad.
Dead aphids.
Dead aphids. That's right. I always call him Dead Aphids, but he always corrects me. Dead aphids. See if we got any other questions in there. No. Any questions on the call? Here, Cody, I've recently joined Trading with Cody, and I certainly appreciate your analysis. It has been as good as it can get. Bang! I did not make that up. What do you think about Voice Revolution stock Syna, S-Y-N-A? If you had to work for a tech company, which one would it be? Ooh, 2 questions. I like the first one, I like the second one. A year ago, I wrote a book called 50 Stocks for the Voice Revolution. And Trading with Cody subscribers get all my books for free. And Synaptics is one of the stocks mentioned in there. And again, I haven't looked at Syna in a month or so, but I'll guarantee without looking at it, my answer is going to be, it's up too much for me to really want to go out and be very excited about it. Let's look at a 5-year chart on Synaptics. It's not! Stop the press! There's a tech stock that's not through the roof! I'll take a fresh look at Synaptics. The problem is I think they've lost some business from Apple, or they're rumored to lose business from Android, or both, or whatever. But heck, stock's where it was 5 years ago. It's at least worth another look. I like contrarianism of it. Thanks for the question. And then your other question is great. And not to mention, you started off by telling me I was good at my analysis. Has been as good as it can get. I like how I phrased it though. It's not is as good as it can get. It has been. Because on Wall Street, it's what have you done for me lately? Has been is the right present. Because I need to think I am as good. My analysis is as good as it can get. Yeah, I got lucky. Had some good calls.
Has-been's better than it ever was any day.
Piper chiming in with the hippie commentary from the peanut gallery. If you had to work for a tech company, which one would it be? I don't have to work for a major corporation. Piper and I were actually just talking about this topic yesterday, that I'm, like Piper, we're different in many ways, but neither one of us is wired to work for a corporation. I have worked for giant Wall Street firms. I've worked for incubators. I run my own hedge fund, and then I worked for Fox. And I wouldn't work for a giant tech company. I do have the IM app, and I consider the IM app a tech company. And Train Cody is sort of a tech company because I'm revolution investing in tech stocks, right? I would not work for a corporation, though. I would do my best to try not to. I'm just not wired for the corporate life. Any last questions? Piper, the live stream's not working?
Nope.
Ouch. Let's see if there's anything on that YouTube. I think people try to ask questions and stuff. Comments. Show. Oh, we might have had them, but I didn't see them. If you have any questions on YouTube, ask it now. Forever hold your peace. Give you all the ping pong wisdom I've got. Boy, I need a haircut, huh? All right. Peace, love, happiness here. See how many times I can hit the camera before we turn it off. Got 5 shots. 6.
Couple never wases.
Dang it. All right, let's shut her down. Thanks. Oh, any questions on the call? I had you guys on mute. Anybody in the conference call need a question? Oh, great. Someone just asked a question in the chat room. When you guys buy a put for protection, what percentage of your account do you buy, and how do you decide how much to get? We have had a huge discussion about that for the last 2 weeks, by the way, and Jane, John, if you would, just search. I mean, we've written, the last 2 weeks has been extensive about how to allocate your portfolio, and the easy answer is that there is not an easy answer. It's not some set percentage. If you're 23 and rich, it could be one amount, and if you're 86, it's going to be another amount, or maybe nothing. So, it's just, bottom line, am I a decent ping pong player? Come on, Piper, let's just do this here. All right. Oh, the computer! That's not fair at all! You didn't even shop for the computer. There we go. Little backspin. Little backspin got you, Piper. Woo! Nice return. Kill shot! Kill shot. Any other balls? Here, one. Ha ha ha! That's a different kind of ball. All right, thanks, guys. Peace. Stop.